What's going on YouTube? Mike here, back again with the last video in 5-Step Forex, a free smart money concepts trading course. So if you're new to the channel and you're just stumbling upon this video itself, this is actually the last video in an entirely free smart money concepts refined supply and demand trading course that I'm using to actually launch my YouTube channel with. So if at any point in this video any of the topics don't make sense, make sure to check above or below this video, and there's actually going to be a link to an entire playlist with 11 other total videos that break down all the steps in depth throughout this conclusion video. So like I said, this is actually the video where we wrap everything into one complete fluid motion to help you actually frame a trade using refined supply and demand or smart money concepts. So before we get started, make sure you subscribe to the channel and turn on your notifications. Also, be sure to check the resources in the description. Throughout this video, I'm going to be mentioning a full course that I have. So I'm using kind of the free course that I've been leaking out onto YouTube over the last couple weeks and over these 12 videos. I'm using that as kind of like the teaser for my full in-depth course. And so I just want to be really honest and upfront. There is no, in this course, it's not 100% of what there is to know about smart money concepts. Yes, you can use this course and the stuff in this course to become a trader and to use it for trading smart money concepts. However, there are many other pieces to the puzzle that I don't go over in the free course. And so if at any point in time you decide you'd like to take your knowledge base to the next level, be sure to check the links in the description below for more information on my in-depth course. Also, like I said, be sure to subscribe and turn on your notifications, because from here on out, I'm actually going to be doing a lot more value-packed videos that have more topics in one video compared to how I've been launching this channel, which is just one topic per video. So you definitely don't want to miss everything coming up. The rest of this year and beyond is going to be really big for this channel and for Renegade Forex. I have a lot of big plans to hopefully help as many people as possible with their trading. So before we get started, make sure you check out 5stepforex.com as well as renegadeforex.com for some more free as well as paid resources. These are my main websites and blog that I have, as well as anything below this video. The links there are also my products and resources as well. Also, really quick, if you want to get this entire course for ad-free and also the free slides, like the actual PowerPoint slides that you're looking at right now, you can check the links in the description as well. Lots to talk about links in the description, but just so you know, everything that I have is down there, so it's definitely worth checking out. And you can get this entire course for ad-free. Disclaimer, it is the exact same course. There's just no YouTube videos. So it's like the exact same video. You can just watch it completely ad-free in a structured members area rather than trying to find the actual playlists and the order that all these videos go in. And then also, if you want to get the copy of these slides that are throughout this entire course, you can do that for completely free at the links below as well. All you have to do is just enter in your email, and I'll send those automatically to you at the email address that you provide. And last but not least, I did already mention this a little bit in the beginning of this video, but I do have a completely full in-depth course, and I'm using this free course on my YouTube channel as kind of the teaser to launch my full course with. And so if you're interested in taking your knowledge to the next level, be sure to check the links below this video for an in-depth smart money concepts course, also known as refined supply and demand. And that will get you on the fast track from being an absolute beginner trader or an intermediate trader to all the way up to an advanced and funded trader. I myself have used these same exact topics and concepts that I teach in my course to get funded. And I'm sure by the time you join, you'll have many other people become funded traders or taken their trading to the next level of whatever their goal is or their level of success. And so in the course, we discuss the beginner topics that we've already gone over in this free course more in depth, as well as intermediate and advanced topics that include swing structure, multi-time frame analysis, protected highs and lows, refining supply and demand zones, flip zones, trend changes, liquidity, confirmation entries, Wyckoff, trading psychology and the mentality, trade journaling, and so much more. We also have daily routines and reading lists and all sorts of stuff that we cover and talk about in the course in depth. So if that's something that you're interested in, be sure to check out the links in the description below. And hopefully we'll see you in the members area. Okay, so let's go ahead and get started now with actually putting everything together in the conclusion of 5-Step Forex, this free smart money concepts trading course. And so just a quick overview of everything we've touched base on already. We already went over break of structure and applied that to our charts. We already went over supply and demand zones and applying that to our charts as well. We talked a little bit about change of character. We also talked about entry points and then setting profit targets. And so these are basically the 5 core principles or the 5 steps in trading refined supply and demand, or becoming an institutional trader, or just using smart money concepts, which is kind of the buzzword that's being coined around this strategy. And so to frame a trade, we need to basically remember in the back of our head all 5 of those points, all 5 of those steps. But the main things are a break of structure to tell us the likely direction that the markets are headed, and then also remembering supply and demand zones that we can place our entry on. So it's really break of structure, supply and demand, and entries that are most important in in actually framing a trade immediately. You still need to keep in mind your profit targets, as well as if you're going to watch for a change of character. But those the profit target can be placed kind of after the fact. And so if you're new to this, you don't need to necessarily always be remembering like all 5 steps right, constantly all the time. The main 3 things are just the break of structure, waiting for it to retrace into a supply or demand zone, and then placing the entry on the supply or demand zone, depending on if you're buying or selling. And so this may, if you're new to trading, this may seem like quite a lot, but as you practice this, as you back test it, and as you actually trade live, it does become really easy, and it just becomes just like speaking, just like speaking English. It's something that you just pick up and you just become competent in it, and to the point where you don't even have to think about it anymore. But in the beginning, it may seem a little bit overwhelming. And so that's the point of this course, is to try to take the overwhelm out of it and just simplify it as much as possible. So to keep this lesson in this video as simple as possible, I'm just going to be mainly focusing on a profit target of the next high and my entry on the extreme edge of the supply or demand zone using a pending order. In some of the previous videos, we talked about using a fixed risk to reward ratio for your profit target, or taking partials at different levels, either fixed risk to reward or a actual technical level on a chart. But for this example, just to keep it really easy, I'm just going to use the next high, which is basically where the break of structure starts to retrace back down into the supply or demand zone. And like I said, I'm going to use my entry on just the extreme edge of the supply or demand zone. We also talked in previous videos about using confirmation entries, which we go over in the full course that I have. But for this, I'm just going to use pending orders on the extreme edge of the supply or demand zone. One last note, we did talk about placing your pending order at the 50% line or the 75% line of supply and demand zones. And so, yeah, like I said, just to keep it really simple, I'm just going to keep my pending order at the extreme edge of the supply and demand zone. So as we go through this, I will include a few examples that have a change of character and a few examples that are using a pending order for more of a hands-off style of trading, the set it and forget it method, which is really what this course is tailored to. But the more advanced traders who are still getting familiar with change of character, I'm going to include at least one example on live charts about how to actually add in a change of character. And so throughout this entire lesson, just remember that this applies to any time frame in any chart. I'm going to be using majority of the 4-hour chart, if not the entire lesson using the 4-hour chart. But this literally applies to any time frame. You can use it on a monthly chart, daily chart, 4-hour chart, 1-hour chart, 15-minute, 1 minute, 15-second. It doesn't matter. This literally applies to any time frame on any chart. It doesn't matter if you're trading Forex, stocks, indices, commodities, any of that stuff. It all applies literally to any chart. So it's really important to keep that in mind, because I know that there's going to be, as this course grows and as more people watch it, I know there's always going to be people asking, well, what about this time frame? What about this chart? What about this? What about that? And just always through in the back of your mind, just remember that this is applying to any time frame and any chart. So to place a trade using the steps we've learned so far, this is essentially what we're doing in a nutshell. We're waiting for a break of structure to give us the likely direction that the trend is most likely to continue going. Obviously, nothing is 100%, but after we get a break of structure, that usually implies that the market at some point in time is going to continue the same direction that we got the break of structure. So if you have a bearish break of structure, it's likely that the market is going to retrace back into the newly created zone and then continue bearish at some point in the future. And it's the same thing for a bullish market. If you get a bullish break of structure, it's likely to retrace into the newly created leg or zone and then continue bullish at some point in the future. And so after we wait for a break of structure, we then plot our supply and demand zone. As soon as we get the break of structure, we can do this. And like we talked about, the supply and demand zone is above or below the break of structure, depending on which direction the break of structure is actually going on the chart. After we plot our supply and demand zone, we then place our pending order on the extreme border of the supply and demand zone. Like we talked about, you can customize this to your trade plan to where you enter on the 50% line or you wait for confirmation. But in this lesson, I'm just going to be keeping it as simple as possible. So after we place our pending order, we place our take profit at the next high. And just for clarity and to avoid confusion, the next high is just simply the point where the break of structure started to retrace back into the supply and demand zone. And so just to be clear, I'm going to go over all this on an actual chart and show you everything, putting it together. But I like to always, talk it out and go over the slides and then actually apply it to a live chart. So if you're more of an advanced trader and you want a confirmation entry, you can look for a change of character, which you would be doing in between steps 2 and 3. And so this is actually technically a 5-step process if you're using a change of character. If you're not using a change of character, then it's just simply 4 steps. And I will leave that obviously up to you to decide how you want to trade going forward. So before we actually jump onto the live charts, I just want to shout out one more time that I do have a full course. Be sure to check the links in the description below this video if you want to take your trading knowledge to the next level. We talk about swing structure, multi-time frame analysis, protected highs and lows, refining supply and demand zones to increase your risk to reward. We talk about flip zones, which are basically where supply and demand zones flip into failed reactions. We also talk about trend changes and how to spot those on any time frame. We talk about liquidity and how liquidity can actually help fuel moves and create higher probability points of interest. We also talk about confirmation entries. We talk about Wyckoff. We talk about trading psychology and the mentality that is required to be a trader. We talk about trade journaling, and we also have so much more in the course, like reading lists, daily routines. There's all sorts of stuff that I don't even have time to mention in this video. Okay, so let's go ahead and get started with actually putting everything together on a live chart, or at least using the replay mode in TradingView and the benefit of hindsight. We're going to go ahead and actually now put all of this into one fluid motion so that you can see everything from start to finish in regards to actually framing and placing a trade using the 5 steps that we've gone over in this free Smart Money Concepts trading course. So let's go ahead and get started. You're looking at a 4-hour chart of AUD USD. This is the main pair, actually right now the only pair that I trade at the time of filming this video. And I'm going to go over the 4-hour chart, although I do normally trade the 1 minute, 5 minute, and the 15 minute. I still use the 4-hour for the overall higher time frame bias. And so basically what we're looking at here, I'm just going to pick a random spot and first of all go over the find the 5 steps and highlight them without using the replay mode. And then I'm going to go through the actual same areas and use the replay mode on TradingView to actually show you what it would look like and simulate what it would look like using an actual live chart. So let's just touch base really quick again on the 5 steps just to go over it with the optional change of character and kind of go from there. So basically, I'm just going to pick a random area, and I'm just glancing at this area here. I can actually see a trade setup that would include all 5 steps. And so we can see if we come back just a little bit, we can see here we do have a break of structure that happens right here. And we can know that, and we always know after a break of structure that usually price will retrace back into that zone before continuing that same direction. And so the break of structure, we can then mark our supply, our demand zones, which is the last down move before the up candle. And so I'm going to use our drawing toolbox here to highlight that last down move before, the last down move before the up move that broke structure, not the up candle. There's the up move that broke structure. And so I'm going to highlight that last down candle with our drawing tool, the box tool. And we can see at this point in time, price did not actually retrace all the way into this demand zone. It actually left before getting tagged in. If you would have had a pending order down here, you would have not actually gotten tagged in. However, we can see that there is actually a change of character here that's happening. So in this pullback, what we can see is price pauses. 1 second. You can see price rallies up, pauses at this high, pulls back, wicks that high, pulls back, tries to wick that high again, and then it starts to actually pull back. On these smaller moves, it's actually starting to pull back into this range. And so we can see at this point here, it actually reverses and breaks or wicks above this high. And so right at this point in time, when this candle right here actually wicks above this high, we can actually call that a change of character. And so at that point, we have a change of character on the 4-hour chart. Let me actually just zoom in really quick. So right at this point here, we do have a change of character. I'm just going to delete this to keep the charts nice and clean. And so we have a change of character, which is the earliest sign that the trend could potentially be reversing. And at that point, price actually does pull back into the demand zone that's created here. And when I'm not refining a demand zone, I always just include the next down wick. So in this example, this was the last down move, last down candle before the up move that caused a change of character. However, in this candle here, the wick did trade just a little bit lower. So I'm including that lower wick in this demand zone that I'm actually drawing here. And so if we take our box tool out and draw it out, we can see that price did actually get tagged into this demand zone in this candle here, where it then continued on to actually break structure again. And so let's go over this example a little bit more in depth here, because this is actually a great area to start our overview and our conclusion video of 5-step Forex. So these are the problems, some of the issues, not necessarily problems, but some of the issues that you're going to run into with trading like this. If you're trying to use the set it and forget it style, where you're not really paying that much attention and you're just favoring the extreme zones like this, you're going to have times where price doesn't actually tag you in. And you're going to have, this is over the period of like a week or whatever. So this demand zone was created on November 21st of 2022. And then it's not until, November 28th of 2022. So like whatever that is, like 7 days later, the price even remotely comes close into this, and then you got to wait another day to see, that it's actually giving you a change of character and then continuing without you. And so this can be kind of a drawback of trading the higher time frames and also using the, pending orders and just setting it and forgetting about it, because you can miss a lot of trades or miss a lot of opportunities. So learning to understand and look for a change of character, which is happening right here, would actually allow you to get in this move to catch that new high instead of waiting for the actual break of structure. Like if you didn't use a change of character at all, you would need to wait for a break of structure here and wait for it to retrace back into this demand zone, which it does hit again, you can see. But by the time you were, let's say you saw this demand zone actually creating and you're waiting and waiting and waiting for the next, you miss this and then you're waiting for this break of structure and retracement. This is now, the first week of December 2022. And so you're at like, whatever that is, 2 weeks, almost 3 weeks before you even get into a trade, if you're not looking for change of character and if you're trading higher time frames. So using this examples and using what you're learning in this course, you can then either A, learn to, become a little bit more advanced using change of character, or you can B, watch multiple pairs, which is probably what most people are going to be doing. But these are just a few things, drawbacks to trading without using confirmation entries and also using the higher time frames. So let's go ahead and continue on just talking about the 5 steps here. And I'm actually going to use this opportunity to use the replay tool, and so that we can just go over this a few times to actually cement in what we're looking for here and draw it as it's happening to try and simulate a live chart. So if we take our replay tool, we can see I'm gonna leave the drawings on for the first run through, and then I'll take them off for the second run, just so we can see exactly what's happening. So let's say, for example, you've been watching the 4-hour chart here, and you see you're watching this live chart here. You're updating your charts for the morning of that Monday morning, and you obviously at this point in time you would think, okay, this is going to continue as a bearish move, and you probably, if you're sitting here and you're looking to take a trade, you'd probably actually be marking it right here and actually setting a pending order here to go short from this zone, which is totally fine. If I'm using this method, I would be doing that too. However, I would also understand that like this move down here is actually, like this bearish move is actually counter to, we're trading counter trend if we are taking that direction. And so this is stuff that we go over in my in-depth course that I have, knowing when to stop trading counter trend and look for a pro trend move, pro trend being the setup that we're about to see. So let's say, for example, being realistic here, you have a break of structure, you're looking for it to retrace and take it short. You would obviously take a loss with the benefit of hindsight. You can see that a couple days ahead. So yeah, we could see it right at this point in time. That would have hit your stop loss. However, now we can understand that if this candle does break structure, we can then look for a retracement into this demand zone and a trade to continue higher. So let's fast forward. We can see that it does trade a few candles, or maybe even 2 days. Yeah, it looks like almost 2 days past the point of breaking structure here, and before it actually starts to retrace down into the zone. So somewhere at this point in time, you would have then marked up your break of structure and your actual demand zone here on this last down candle before the up move that broke structure. And you would be setting your pending order at the open of that 4-hour candle. And so just to make this a little bit more obvious, let's go ahead and set our risk to reward tool here. And you'd just be setting your profit target at the next high, which is right where the break of structure starts to retrace back into the zone. So let's go ahead and keep fast forwarding a little bit and see what happens. As you can see, as we already see and know, price doesn't actually tag into our zone. And so at this point in time, you would have, or in a few candles, you would have missed this trade. This trade would have not tagged you in, which is a valid, it's a valid mistrade that is going to happen using this simple method of trading. And so the next day, fast forward a few candles, we then get our change of character. And so if you're watching for a change of character, you then know basically what's happened now is price has completely 100% shifted pro trend with the overall time frame. So if we zoom way out, at this point down here, price did reverse. We have multiple breaks of structure to confirm that. And this little leg here that we were looking for the counter trend move that did actually end up breaking structure was heavily counter trend to the overall time frame and direction of the daily and the 4-hour chart, and even the monthly, the weekly and the monthly chart. And so at this point in time, as soon as you get this change of character, followed previously by the break of structure, we then know that the structural alignment is very highly, it's a very high probability that price is going to continue to create a new high and eventually break, this high here and go on, even further up into a higher supply and demand zone, further on back in the chart. But we'll try to keep it, simple and to the point with the 5 simple steps here. And let's go over, what happens now at this point in time. So if you're not using a change of character at this point in time, you would have just missed this trade and you would need to wait for the break of structure that, with the benefit of hindsight, we know happens right in this area, and then looked for another trade to come back into this demand zone. But since we are, intelligent traders and we understand what a change of character is, this is an opportunity to actually get in and find and follow that new high to actually break this structure and most likely at some point this high here. So let's fast forward a few candles. At this point in time, before we fast forward, you would have a pending order, your entry at the top of this demand zone with your stop loss just below the demand zone and your profit target at this high, or according to whatever your trade plan is that you want to follow. And so let's fast forward a few candles. We can see that at that candle right there, depending on your spread, you may have gotten tagged in, or I think we go another candle or two to where it actually, clearly tags us in right there. So definitely would have been in here if you had, depending on how you set your order, if it's like exactly on the line or a few pips above it to cover spread, you may have been tagged in one of these 2 candles, but obviously you're definitely tagged in by this candle here. And after that, we can fast forward. We can see it does, the lower time frames we can see are starting to create a new trend, and we then break free. I think, okay, it comes back one more time to test this candle here before it actually, breaking that new high and clearing both of these new highs. And so this would be right around the New York Open on Wednesday, November 30th, right when the peak trading times pick up for the US sessions. And so at that point in time, you would have bagged a 1 to 2 or 1 to 2.15 risk to reward trade, which is pretty good. I mean, using refinement and confirmation entries. Well, this technically is a confirmation entry using a change of character, but using refined zones, if, for example, you were using on a lower time frame this candle, and this was your entry, then you would have gotten a much higher risk to reward. But even nonetheless, 1 to 2 is a great trade for most traders. Most retail strategies, half of them that I've ever seen or used when I first started trading they don't even have 1 to 2 setups. They're just all 1 to 1, which is horrible. And so I know that there are a lot of people that, would die to get regular 1 to 2s, but to me, this is actually really not that great. Usually I try to trade 1 to 5 or higher risk to reward setups using confirmation stuff and everything that I teach in my in-depth course. And so let's go ahead and just kind of, and so now what I'd like to do is just rewind again and get rid of all the drawing tools so that we can actually draw it on, step by step and show you what you would be doing, if this was like a totally blank chart. And so let's go ahead and just get rid of all this here. And let me pick the rewind again here. And so let's just rewind to here because, If you were really aggressively trading, you could be trading this counter trend like we already talked about in the last setup. So let's just kind of watch, let's back up from that trade and just watch realistically what someone would be doing following this system. So at this point, we do have a break of structure. It's a little bit lower at that point there. So we have a break of structure, which we can mark with our line tool. I have my pre-saved templates that we can see, or that you can see there for the 4-hour. And so the last up move before, or the last up candle before the down move that broke structure is our supply zone. You can, if you want to, refine it to the next candle over, but to keep it fair and follow our rules, not really talking about refinement yet, we just want it to be the last up move, or excuse me, the last up candle before the down move that broke structure. And so since this wick trades a little bit higher, I'm including that wick. So it's from the bottom of this candle to the high of this candle that is our supply zone in this scenario. So if you were following the method, you'd likely have a pending order set here. Aside from me saying this, if you're totally new to trading, you may not understand that this is heavily counter trend, and you may not want to include that in your trade plan. However, just being realistic, most people are probably going to be following this example and looking at this. If you were looking at this real time, this would be a legitimate potential trade that you could take. And so we fast forward, the benefit of hindsight, we already know that this zone does not hold. You would have gotten tagged in this candle, and in the next candle, your stop loss would have been hit. And so at this point in time, we can then call this a trend change, and we can understand that the 4-hour has now switched bullish again. And we can mark that with our break of structure line. And anytime we get a break of structure, we can then mark up our supply zone here, or excuse me, our demand zone, which is the last down candle before the up move that breaks structure. Using our box tool, we can then drag that over. And as soon as we get the break of structure, we can then just set our pending order on this zone here. And we set, if you're doing this like right immediately, you could set it at this candle's high right here. Or if you're understanding it a little bit more in depth, we would then set it at the new high here, because we're basically trying to catch the low in this overall pullback and grab the continuation to clear that new high. But either way, you could also, as price develops, you could adjust your take profit to wherever the candles end up being. So let's go ahead and fast forward it a few more candles. You can see that it starts to pull back. Brief pause. At this point, we do get a change of character. Hint, hint. We can see that at that point in time, price does trade all the way down. Look at that candle. This is a pullback on a lower time frame happening. We can then see, okay, at this point in time, it's probably pretty likely, if you were waking up, Monday morning or Monday night, whatever, I guess this is Monday night into midnight, midnight New York time, you can see, okay, it's probably pretty likely that at this point in time, I have actually missed this trade. And it's not actually going to tag my demand zone. So you could, leave it there just in case it does come back down lower, or delete your order, whatever you want to do, whatever follows your trade plan. And then I believe that this is actually in the morning. Yeah. So during the New York session, if you came to set down, like for me, for myself personally, I would actually be sitting down to trade somewhere in this zone here. And so I would then, at this point in time, get rid of this order, and I would get rid of this demand zone. I guess technically you could keep it on there in case the change of character fails. But, if you want to keep your charts clean, you can get rid of it. At this point here, we do have a change of character, which is basically a pause, pullback, continuation, and then it breaks that pullback, or at least wicks it to cause the change of character. We can then mark it here, change of character, and we can see price is already at this point on the replay bar about to tap into our demand zone, which is the last down candle before the up move that broke structure, or before the up move that caused a change of character in this case. and we can then set our pending order here at the open of this candle or of this demand zone, and we can set our take profit to the high, to the next high, which is where the break of structure started to pull back into the range. So that high right here, if you're understanding how structure works, you can also set it for this high up here or something else that follows your trade plan. We're just going to keep it simple for this lesson and use this zone here or this high here. So fast forward a few candles, we already know it does kind of dance around for a little bit before actually tagging in later that night, at which point we already know trend continues, comes back to retest a little bit there, and we do, explode up to a new high, and we ultimately end up clearing that old high, that old swing high right there. And so at this point in time, you would then have your take profit fully closed or following your trade plan, managing that accordingly. And so that basically is the 5 steps in a nutshell for a buy example. And we also did include a change of character there. Now, after this, I do believe, I'm actually just picked this spot totally randomly, but I think a few candles later, it actually does come back and tag this zone again. So let's just go ahead and keep walking through what you would see here on the chart, or what you would be watching on the chart and how you'd be marking it. So at this point in time, with this candle, you do have a break of structure right here. And I'm going to go ahead and get rid of this line just to keep it nice and simple and easy for everyone who's following along. Any new traders, you don't necessarily need to know the swing structure like that. So we'll keep it nice and easy for any new beginner traders and just keep it to, the break of structure here at hand. And so after this break of structure, we can then, mark up our demand zone, which we already, in this case, we already have, which is the lowest point that before it broke structure, or in other words, the last down candle before breaking structure. And so I just realized I actually didn't include the wick in that case, but obviously in this example, it didn't matter anyways, but let's just keep it consistent and include that wick there. So if you did not see the change of character here and you did not take this trade, your charts would look more like this here. And we can then, at the break of structure, we can then add in our demand zone here and wait for price to actually tag us in by setting a pending order and our take profit at the next high. And so right now I'm just going to set it at the high of this candle. Obviously this could continue up higher or pull back right from this zone, and I'll adjust my take profit accordingly as price develops and as new candles print. So let's go ahead and just fast forward and see what happens. Looks like it's probably going to start pulling back here soon. And so at this point in time, we do have a change of character at this low here, which would tell us that it's likely that price is going to come back into this zone. And so I'm going to set my take profit at this high, keeping the entry and everything on this demand zone here, just following our system. I mean, like this is all, it's really pretty simple once you get the hang of it. And this is all I would be doing on any chart that I'm watching. If you're trading the 4-hour chart, you might be watching 5 or 10 different pairs and just be doing this every time a new 4-hour candle comes out. And so just continuing on here, we do have looks like price tries to rally and tries to make a new high. At this point in time, it did fail before actually continuing back down with the actual retracement into the zone. This is one thing you'll notice as you start to do a lot more chart analysis, and this is also something I go over in the course, that when you're in an actual pullback, pullbacks are usually very messy. So like taking this trade right here, if you are watching this, you could take this as a counter trend trade to try to actually trade into this zone. However, so right here, let me just draw it up really quick. At this point in time right here, this is a change of character, or also a break of structure. It's kind of the same thing in this example, but I'm going to mark it as a change of character. And then it actually retraces up into this supply zone here. And this would actually be a valid trade if you placed a pending order to go short right here and target this demand zone. This is something that you can definitely do if you want to be aggressive and if you want to trade counter trend. However, you just need to understand that pullbacks like this, and like we talked about in the course, and like I'll probably do videos on in the future, pullbacks can actually be really messy, and they can try to actually rally and close again. This is also something that has a lot to do with liquidity sweeps or failed higher highs, which is something that I like to see before I actually jump into a pullback. So these are all kind of advanced topics, but if you were actually watching this, that would be a legitimate trade to take and target down this in this demand zone here. But let's just keep it simple. Since we have the breaker structure here, we're just going to watch for a long from this demand zone. You can see that we're probably going to get tagged in here within the next couple candles. And so at this point in time, depending on your spread, it's just barely wicked that, like maybe 1 pip into the demand zone. And we'll see if it, which it could have gotten you in, but we'll see if it runs. Okay, so at that point in time, you definitely would have been tagged into the trade. And at this point, you would have a open position with a 43 pip stop loss and 163, 160 pip gain, depending on how you have your take profit, 170 pip gain, which would be almost a 1-to-4, 1 to 3.9 risk to reward ratio trade. So let's see what happens. Okay, and so at this point in time, obviously this is going in our direction, but I just want to point out that right at this point here, we do have a change of character. And let's continue on. Okay, and so you can see at this point in time on this candle, you would have actually hit your take profit for a almost a 1-to-4 risk to reward ratio trade. And we can then mark our break of structure. And what can we do? We can wait for the next time that price retraces in and hits this demand zone. Before we do that, I just want to point out really quick that at this point in time, when you get a change of character on a lower time frame, this is actually a swing reversal. Swing structure is reversing. And you need to understand that in situations like this, it is totally possible that this price action could retrace all the way back down before it continues on. We obviously have no control over what price is doing or how it's reacting, but you need to understand and be aware that you could have all of this gain here, which is like a 1 to 3, 1 to 2.5 gain. And it could take all of that back to mitigate a zone down here before continuing on. In this example, it obviously didn't do that. And hopefully throughout this, the rest of this lesson, we can find something where that does happen. And you just need to be prepared and understand that that's just how that's where multi-time frame analysis and understanding how price action works will come into your benefit, because there's a lot of people who would at this point in time move their stop loss to break even or even move it into profit. But for me, I don't even touch my stop loss at all. I just leave it open, because if as soon as you move it up, you're just gonna, it's gonna come back down, stop you out at break even and continue on. And so at this point in time, this trade, depending on I would say you probably wouldn't actually get tagged in on that candle. So we'll just go here at this candle. It looks like this was, let's see, thought that. So from this candle here to the point in which that candle broke the high, looks like it was 6 days and 4 hours roughly that you would have held that trade. And so obviously that's a swing trade, which does not, I don't have the patience to do this on a 4-hour chart, but that's why I like to remind everyone that it does work on any time frame and any chart. It doesn't matter. So that being said, let's go ahead and continue on let's try to find one more example and see what happens here. in this continuation of this trend. And then we'll see about trying to find a sell example and doing the same thing, just so we can keep, both long and short positions in this course, so you can see what those look like. So I'm just going to go ahead and clean up the charts a little bit here and get rid of some of these older demand zones. And so usually what I do at this point is just move the box back to where it actually got tagged and then get rid of it, or get rid of it from being all the way out here, so I can create a new demand zone here, because now that we have this break of structure, we can expect price to come back in and tag this demand zone and continue on to create a new high. So let's see what happens. I don't actually know. I picked this spot completely randomly. At this point in time, you can see price pulled back. You would have a pending order right here. We'll see. I don't know if this actually goes. Obviously, this is a much higher risk to reward trade, and we would also assume that if this does go in our favor, we'd be holding it for quite some time before it actually hits the take profit. But let's go ahead and see. So you'd be tagged in on Thursday, the 15th of December at 9 a.m. New York time. And okay, at that point in time, you would have actually hit your stop loss. And we can see that at this point in time, this may be a good point of interest to take a short, but personally, I would let a little bit more price action develop before we, take any shorts from here. So I'm going to go ahead and just get rid of this. I'm going to look for sell examples in this market and see if I can find anything and then kind of do the same thing here. So looking for a sell example. Okay, so just picking a quick sell example, I can see one right here where we do have a supply zone here. We do have a break of structure from this low right here. And it then price does retrace into that supply zone and continues on. So let's use this really quick just as our point of interest for a sell. Obviously, there's a lot of different areas where you could be selling from, but this is a little bit, I guess it's not a super clean example, but just picking one at random here on the chart that does meet our expectations, just so you can see what that looks like. So let's use the replay tool. We can see at this point in time, there was backing up just a little bit. There was another break of structure here. It retraces into the zone. It doesn't really go, it's not that deep of a retracement before it continues on, as we know with the benefit of hindsight. At this point, actually, I think that, ends up being a wick. A few candles later, we do get a break of structure. At that point in time, we can know that price is likely to continue this way, bearish after a retracement into the zone, ideally into our supply zone, and tagging us in to take us with it. So fast forwarding a few more candles, it does continue on for at least another 12 hours before starting the pullback into the zone. And at this point in time, it would have tagged us in. So ideally, as soon as you see this break of structure, you would draw out your supply zone. You would set a pending order on the extreme, on the bottom side, the downside of the supply zone, with your stop loss on just above it, above the high or above the top of the supply zone. And in this example, you'd be tagged in right at this candle here. Price does dance around in your zone for a while. And as we continue on, price then goes to our new low, as we know with the benefit of hindsight. So our target would be this low right here, which is a total of 1 to 2.66 risk to reward, depending on how you set your stop loss. You could probably get that a little higher, but it doesn't really matter at this point. We can know that price does clear that low right there. And so at this point in time, you would then watch for, or you'd then mark your break of structure. And we would get rid of our, clean our charts up a little bit here. And we would then mark the last up candle before the down move that broke structure as our supply zone. We would then wait for a price to retrace up into that and continue on lower. And we just keep following this over and over and over again until something changes, until the trend changes. Like we saw in the first couple examples, you could have potentially been trading a counter trend setup, and price trades through your stop loss and reverses the trend, which you can then just reverse with it and follow it the other direction. And so this pretty much wraps up the 5-step Forex smart money concepts trading course. This is a little bit longer video than the previous ones, but I wanted to actually go in depth and apply everything in one fluid motion so you can actually see how to take a trade from start to finish using refined supply and demand and smart money concepts. And so before we actually end this video, I just want to do a shout out one more time, which you can find at the links in the description below. And in the full course, I do go over swing structure, multi-time frame analysis, protected highs and lows, refining supply and demand zones to increase your risk to reward, flip zones, trend changes, liquidity concepts, confirmation entries. We talk about Wyckoff and Wyckoff schematics and how to apply that into smart money concepts. We also talk about trading psychology and the mentality behind being a profitable trader. Talk about trade journaling and why that's so important, and so much more. We also talk about daily routines, I have a reading list, all sorts of extra stuff that's not necessarily pertaining to trading itself, but the lifestyle of becoming a profitable trader. And so if that's something that you're interested in, whether you want to secure funding or just take your own account to the next level, be sure to check the links in the description below this video. Also, be sure to subscribe to the channel and turn on your notifications, because from here on out, we're going to have nothing but value-packed videos on this channel and take Renegade Forex to the next level. So thank you for watching. This concludes 5-Step Forex, a free smart money concepts trading course. If you found any value at all in this, be sure to subscribe to the YouTube channel and share this playlist with a trading friend or in your trading groups, because I'm sure other people will find value in it as well.